And they are all, we are very excited to see you joining the event. Today, as promised, we are launching Baltic Private Equity and Venture Capital Market Overview of 2021. The report has been done together with all Baltic Venture Capital and Private Equity associations and prepared by Deloitte. This is already third year of the report, and we are very, very proud to provide with the report deep insights into the local venture capital and private equity fund managers' activities and the ecosystem's growth. Before we start, I want to express our gratitude to Deloitte for professional support to get the report done. And also huge thanks goes to Kristjan Kalda, who is luckily today our panelist also. He was in fact the main initiator of the report's edition. And so we have already for the third year in the row this report. Just before we start, a few instructions. If you have any questions, please put them in chat section and we will try to answer them. Also, the report will be available on the website, and I will put the link here in chat section. And also each of participants will receive the instructions how to get the report. So from myself, it is all. I would like to invite the partner of Deloitte, Linas Galvele, to provide us with a brief report presentation. So Linas, the screen is yours. So.
Thank you. Hello, everyone. Let me just try to share the screen for all of us. I hope you can see it now.
Yes, we can.
Very good. So it's a privilege to me today to present the Baltic Private Equity and Venture Capital Market Overview for 2021. As Anita mentioned, we are doing this report for the third consecutive year. And before I go into details, I wanted to thank you, all the three venture capital associations, Estonian, Latvian, Lithuanian, for cooperation during those years. You know, without you and without your communication with our ecosystem, that report wouldn't be possible. Of course, in addition, a very big thanks to all the funds which have contributed with information, comments, insights, suggestions. All of that is invaluable. So moving into the details, you know, my goal today is not to give you every single piece of statistics, but rather give a very sort of high-level overview of the key trends which we had across the Baltics. In the report, you will find detailed information on each country, portraying the same metrics, you know, both aggregated and separately for Estonia, Latvia, and Lithuania. And I hope you will find it interesting. Starting from the total capital raised, you know, we are trying to keep the statistics back from 2010 in terms of the total capital raised by the ecosystem of the Baltic funds. And currently, year to date, end of 21, the Baltic funds have cumulatively raised 1.8, almost 1.8 billion of euros. That is a huge amount of money. During the 21 alone, 269 million were raised, mostly by buyout and early venture funds. And it represents an 18% increase compared to the cumulative amount at the end of 2020. So the markets are trusting in the Baltics. The markets are trusting in the Baltic fund managers, which is clearly indicated by the levels of capital raised every single year. In terms of fundraising dynamics, 2021 was the second highest year in terms of the amounts raised in euro terms. And interestingly, another interesting piece of statistics is that during the last 4 years, number of active funds in Baltics has more than doubled. Again, this just shows that the maturity of the market, the activity on the market is constantly increasing. And despite the periodic uncertainties, the same as we had, the beginning of COVID in 2020 and the geopolitical uncertainty which we have now around us, that does not stop the investment activity, that does not stop the attraction of capital. In 21, we have 6 new funds launched in the Baltics. Karma Ventures, Livonia Partners, Modus, and Capitalia each launched 1 fund, and Siena Secondary Funds launched 2 new funds. And the highest capital raised in 21 was by Livonia's buyout fund and totaled 136 million euros. And the second largest was Karma Ventures Early Venture Fund, which raised 100 million euros. So these are both notable additions into the accumulated capital, and of course, they will spice up the life in the market for the years to come. Looking at the sources of fundraising, historically, government agencies, and government agencies also include multilateral lending organizations, used to be the most active investor in the region. Now, very interesting dynamic in 2021 was with pension funds. During the 10 years between 2010 and 2020, pension funds have in total invested 314 million euros. In 21 alone, they invested 102 million euros, which hopefully is a confirmation of, breakthrough in terms of pension fund belief in the market, belief in the fund managers, and hopefully they will be much more active going forward. I know that many funds took a long, invested a lot of time and effort in discussing with the pension funds, not that successfully in the past. Hopefully now we'll see the change in the dynamics. In terms of the raised capital, also there were notable increases percentage-wise in investments for family offices and international financial institutions. All of this adding to the capital raised. In terms of capital still available for investment, according to the data which we have, it may not be 100% accurate, but probably as accurate as we can given the available information. The dry powder at the end of 2021 was 821 million, still available for investment. That's as high as it ever was, and majority of those funds, more than half, are in buyout funds. However, even if we eliminate the buyout funds out of equation, early ventures, late ventures, growth investments combined still have close to 400 million euros for investment. And that is a very notable amount, assuming smaller investment amounts into early ventures. A large number of investments can be made in the years to come. In terms of fund investments, 2021 had another record year. We had a record year both by the deal count, total of 270 investments were made in 2021 alone. Some can argue that this is a bit of a catch-up from 2020, but despite of that, that is a record year, and it clearly shows the increased confidence in the market. In terms of the deal value, that's also a record year. We had 138 million euros deployed, and that's also unprecedented level looking at the history of the Baltic investments. Two top sectors, not surprisingly, consumer goods and retail, and computer and consumer electronics. These two sectors are historically attracting most of the investments and continuing to do that. But one other category which I would like to mention is energy and environment. During the 10 years it has attracted 53 million, and in 21 alone, it has attracted 18 million. So renewables, green energy, I'm sure that will remain a very hot topic going forward, and that those amounts will only grow higher and higher. If we look at the top investments by value in the last year, again, based on the information which was provided to us, we have BaltCap's investment in Baltic Ticket Holdings. We have BaltCap's infrastructure investment in Vilnius Stadium, or National Stadium as it's called, and also in Valda's investment into closing the Medica deal. In terms of top VC investments, we have Change Ventures investment to Printify, JB Nordics invested into Verif, and Kalda Ventures investment in CG Trader. Again, I apologize, if somebody believes their investment was higher, that may well be true. We are just operating within the data limits which we have. 2021 was also a record year in terms of divestments. A total number of 57 divestments were made across the Baltic ecosystem from the local funds. And divestment value at cost was 48 million. The same as in previous years, unfortunately not yet, we are able to report the real divestment values as we don't have all the data points necessary for that. Hopefully going forward, we'll reach that level of maturity where we can also report divestment values at real exit values. Most of the divestments were made from the buyout funds. However, also growth investments and early ventures had a number of divestments in the year. Top PE divestments by value at cost, at original investment cost. BaltCap exited their waste management businesses in Estonia and Lithuania, and also Livonia Partners exited their investment in Santa Monica Networks. VC divestment-wise, top divestments again at original investment cost. BaltCap fully exited Cool. Karma Ventures exited SpectX, and Wise Guys fully exited from their investment in Real Torify. The number of divestments, we cannot comment on the real return on investments, but the sheer number of divestments is signaling the growing maturity of our market. And I would expect that over the next couple of years to come, those, the levels of divestments should be only growing higher and higher. Another category which we are monitoring from 2016 is outbound investments done by Baltic funds. We are also seeing increased activity from our funds in the neighboring geographies. The most attractive geographies recently seem to be Finland, Sweden, and Denmark. However, Poland seems to also be catching up, and I wouldn't be surprised that in a year or two, it will be in the top 3 geographies which our funds are targeting. Top funds by outbound investments were BaltCap, Kalda Ventures, and INVL Asset Management. The more specific category which we introduced from last year is diversity and gender balance in our Baltic PE VC ecosystem. The good news is that this year, the statistics across all 4 categories that we track have improved. We have more female investment committee members. We have overall higher number of females working in funds. Also, we saw an increase in female CEOs and females in the board. You will find all the details by country in the report. The only thing I can share is Estonia seems to be the most diverse country year to date. And to end on the high note, as already mentioned, 21 was the year of records. We had the highest number of investments and also the highest value of euros invested in the year. We had the highest number of divestments and the highest exits at cost. And we had the second largest fundraising year since 2010. So ending on this high note, the wish for all the ecosystem members is that 2022, despite all odds, would be even more successful on all fronts and would bring more positive news in the year to come. Thanks a lot, and let's check if we have any questions.
I think we have one question, Linas, asking whether we would receive, whether the report will be available, and the answer yes. And the answer is yes, the report will be available, I think, to everyone. I think today. Anita, correct me if I'm wrong, but I think it's gonna be released today.
Yes, you are correct, Jānis. And everyone will receive also an email with instructions how to access the report.
Okay. Hi everyone. By the way, I'm Jānis Zenis. I'm assistant director at Deloitte, working on this report together with Linas. And thank you, Linas, for presenting it. As a next entertainment session that we have is really to discuss a little bit in more details the result in a lively manner. So I encourage everyone to post their questions and I'll try to read them through, and Anita will help me to remind if I'm gonna skip any of the questions. And I do invite three gentlemen to the panel. We have Arvydas Blože, who is representing Practica Venture Capital. We have Kristjan Kalda, who is representing BaltCap.
Hi.
And hey, and also I do invite Ernest Bordans, who is representing Livonia Partners. Hi, Ernest.
Hi, everyone.
So basically, I think I'm gonna probably share some insights that Linas already presented, the most notable ones, and clearly you guys are from the industry and you are in there, so your insights around it would be very much appreciated and would be, I guess, adding some value to the statistical data only. So definitely, despite being a relatively young market, the Baltic private equity and venture capital industry has shown a substantial growth and essentially is reaching a record heights in 2021. That's what we see in the numbers, with almost 1.8 billion in new capital as a cumulative number from 2010. And also we see a couple of, well, not more than a couple, to be honest, 6 new funds. So which is also an encouraging thing to see. So what's your kind of experience over the course of 2021 with the market and activity in it overall, from the fund growth perspective there? Maybe you could share some thinking about it. So Kristjan, maybe let's start with you.
Yes, hello. So yeah, I was quite happy about what we saw here and about the development of a market, and we might forget that last year, 2021, actually we were still in the middle of COVID-19 pandemics, and for a big part of a year the societies were closed actually. And also we had another negative event that was the shook up of the pension system in Estonia, where it was uncertain how much actually will be left in the pension funds. So people basically could take out their money and cancel their pension systems. So and on this backdrop, I think the results were really good and in line of what happened in the rest of Europe or in the States. Maybe one thing that that caught my eye, and maybe is for the next time to develop our report, is that it would be also interesting to see the data from our local institutional investors. So I do not think we have another place for this reporting their activities. So could be very interesting to have that one as well.
Okay, Arvydas, what are your thoughts?
Yeah, so hi everyone, pleasure to be here, and of course we have to celebrate and give kind of our ecosystem a credit for the amazing year. I think it was kind of I could probably elaborate a bit more on venture capital rather than private equity side, right? And I think we are seeing the kind of aftermath of 2019-2018 vintage kind of fundraisings, where the fund managers are really maturing, and I think they are driving the early stage investments at least, and we can see the number of deals increasing. And 2021 was clearly a record year in terms of inbound investments, as well as record year as well as record year for, let's say, fund capital deployment. 2022 already is another record year, even though we are not halfway into the year. And I think emergence of very different fund managers, emergence of very different distinct theses, even in early stage, gives a lot of optimism about what's going to happen, kind of following overall entrepreneurship spirit in the Baltics, right? So we are, as a fund managers, private equity or venture capital, phased, or we cannot operate outside the thesis that capital has no borders. If we do not act, if we do not invest ourselves, other capital will find its way towards amazing entrepreneurs and businesses that kind of is happening. So I would expect kind of fundraising 2022 to be a good year for fundraising in terms of what kind of how many different funds, different fund managers are raising capital right now, how many are already public. And I do expect a kind of trend to continue upwards despite the turmoil in the global markets. So very bullish.
Yeah, I think we'll probably touch upon many things, but maybe some of the things that caught my eye from Linas' presentation. First of all, I think 2021 was very clearly a year of venture capital, not only in the Baltics, but all around the world. If we had added, as Arvydas said, the inbound investments, I guess the numbers would be, wouldn't even fit on the slides. And I wonder how this is going to look in 2022. I think maybe in 2022, the activity among PE and VC will be a bit more comparable because, again, another thing that caught my eye was how much capital is available now as a dry powder for buyout funds. Probably the 300 to 400 million is an accurate figure because all the three biggest buyout funds have recently raised new funds, and there are also smaller funds. So I think there will be much more activity in the buyout space this year.
Also, I saw that the pension funds investments have been kind of increased, relatively more compared to the rest of the other fund providers. I mean, any comments from your side on this?
Yeah, I can briefly comment also, given that Livonia raised the fund last year. Yeah, I think this is very encouraging for the Baltics, that our pension funds seemingly have become relatively comfortable now investing in alternative funds, both PE and VC. We can be lucky because, for example, in Poland, pension funds cannot do this. So I think the fact that pension funds are so active, this has really enabled the alternative investment funds here. And yeah, anecdotally, we definitely noticed that there is more and more interest from pension funds.
I mean, what has triggered this? Because it seems like this year has been kind of more compared to the last decade. Basically, it has been like. Is any specific trigger?
Well, some specifics that come in mind. One thing is that I think for a couple of years before the Estonian pension reform was actually implemented, but it was already announced, I think Estonian pension funds were putting investments on hold. Now that the first pullouts of second pillar pension fund money have happened, maybe Estonian funds have become a bit more comfortable. In Latvia, a couple of years ago, I think the government increased the allowance for how much of pension fund money can be invested in alternative investment funds from 5% to 10%, I think. So this was definitely a practical thing.
I could probably add that we observe, at least for venture capital, right? If we take the sample, it's finally we have a 10-year roughly track record, right? For starting when the ecosystem kind of was initiated back in the day, right? We have let's say first fund manager generation completing full cycle experience. We've finally realized kind of DPIs above 1, realizations, track record, and so on. And I think it gives a lot of comfort next to, let's say, entrepreneurs or successful entrepreneurs also investing in VCs. So I think it gives kind of finally we are able to appeal to institutional investors, local institutional investors, saying this is an asset class that has proven track record of returns. There are fund managers emerging, kind of second, third time generation coming up with substantial fees. And I think it's more and more kind of data and track record supporting these decisions. And we're truly happy to see that VC is also getting finally some of the attention of local pension funds compared to say, like I'm extremely happy that we are getting at least allocation, alternative asset class in the Baltics is getting allocation on the books of pension funds. And then we can really attack it institutional kind of strategic and very kind of condensed and approach. Yeah.
Okay, maybe I add also, I just read in another context that the worst thing that you hear from the government is that, hi, we are from the government and we are here to help you. I mean, our community needs less and less direct investments or help actually. So we can raise from private institutions, high net worth individuals. Also, we can find investors from around the Baltics and elsewhere. But what we need is some stability that our institutional investors can actually make long-term investments. And before the shook up in Estonia, there was also a shook up in Lithuania actually, and the politicians from time to time try to kind of make these long-term investments from institutions make difficult. I mean, our message and our focus should be actually that the governments allow institutional investors to make long-term investments rather than be looking for direct contributions to our funds.
Okay. And while we're still on the investment and funds raising topic, very interesting for me to hear your thoughts on whether the war has kind of have you had any interactions or situations where you felt like that this the situation in Ukraine basically will in any way impact for this year and maybe next year the opportunities for us to raise funding from the investors? And I mean, probably as far you are as more of the impact, maybe I'm just speculating here, but what's your thoughts from the ground?
Yeah, I can very briefly comment. Luckily, it seems like local funds, maybe regional funds, and also, of course, development finance institutions are continuing their business, and doesn't seem like there have been much interruptions. I assume that Baltic pension funds may have to adjust the allocations in case some of their other public equity and bond investments are decreasing in value. Then also the amount that, the 10% that they can theoretically allocate, the 10% of the AUM that they can allocate to alternative investment funds maybe becomes a smaller number. But definitely, I guess we could say that there's the investors from Switzerland or Portugal that can invest in Switzerland or Portugal are probably becoming a bit more cautious now again about this region.
Yeah, when we looked at these outbound investments, when we didn't see Russia there at all, I think, and that shows that our community has been focusing west and north and south and not to the east actually. and I believe this is actually an overall situation. So we did not have, I believe, an impact from direct impact from the current war. Of course, there will be indirect impact. So I think in that sense we are pretty well positioned to continue, and I think the write-offs, if any, will be tiny from this event.
I agree with all the points. Probably, you know, despite all the thoughts kind of and prayers being with Ukraine and the tragedy what's happening, it's hard to look at it in isolated case, right? Because I think the outbreak of war really contributed to, let's say, macro situation that everyone kind of expected a bit of recovery after, you know, very slow start of the year, but it got dragged out, and now it's not clear what's going to happen, and there's like big consensus view towards commodity impact and towards the end of the year. What it means that probably interest rate hikes just puts a lot of pressure on terminal value for, let's say, technology ventures, especially. And then when you have to, this is why the repricing is happening. So I would say it has a lot of impact on the overall macro situation. And since especially VC space in the Baltics or startups are depending on financing from bigger regional or global funds, this will have an effect for sure. Like, and not only in the Baltics, like globally. So I would say as a contributor to overall macro situation and dragging into this global, let's say, phase, we do expect it will have certain implications towards fundraisings towards the end of the year.
Yeah. I've been recently working with some larger European investment banks. In fact, rather than investment banks, the debt providers for the project finance and the like projects, and have to admit that only a couple of those who were based in Warsaw was okay to provide some quotes for a larger investment projects. The rest either laughed, unfortunately, or said, listen, guys, come after a couple of months and then we'll talk to you. Currently, there's nothing we can say. And those who said, yes, let's talk, they said right from the beginning, it's going to cost you twice as much as a couple of months ago. So that's the reality, I guess. Yeah.
It's strange that this is coming also from Warsaw. I would have thought that the situation in Poland is similar. Yeah.
Well, but those are like a big, like for example, City was one of them. They have an office in Warsaw. So they said, yes, let's talk, but it's going to cost you quite a lot. Yeah. All right. We have a couple of questions. Maybe let's read them. Well, lots of questions. Fine. Let's read them through. Do you observe, I guess, new challenges or topics which became crucial from the 2 months perspective? The question regards the cybersecurity and deal flow terms of data exchange during the divestments. So we're running a little bit ahead of the, rather than the funds raising, it's a divestments and investments part, but maybe if you have some thoughts, you can share now.
Yeah, well, for us, obviously, cybersecurity is always a thing that you have top of your mind, but I wouldn't say that something has drastically changed over the last 2 months, except for the Latvian emailing system inbox going down yesterday. It didn't anyhow influence us, but it was quite major, I think.
Okay. Then we had a question around the Polish pension funds. So do you know whether they are also kind of looking to invest into alternative investment funds? Do you have any experience with that?
You mean in the Baltics? Well, I haven't seen the Polish here.
Okay.
Yeah, I think I was in Poland last week for this CE conference there, and so they have the PFR, Ventures, which is a government institution investing on all the funds. But with regards to pension funds, some people were saying that there's some movement to potentially allow pension funds to invest in private equity funds, but as of now, I understand that they're not even allowed. Pension funds that hold private people's money cannot even commit to PE funds.
Mm-hmm. Okay, let's move forward. And another topic that we had in the report was around available capital. And as you already mentioned, and Ernest, you mentioned that clearly there's lots of dry powder there. 821 million that we see currently is waiting to be deployed. I mean, what's your thinking? You know, how normal the situation is, and maybe what are the reasons behind seems to me quite a relatively high amounts of dry powder.
Yeah, it's true. So when you asked about the influence of war that is going on at the moment and is unfortunately not ending soon, but at the same time we have this very high liquidity. We have also inflation that is highest we have seen actually during our almost during our independence. And then we have also this kind of softness of the markets in the States and Europe as well. So we are like in between many elements that kind of tear us into different directions. So, but liquidity also means that for the time being, if we have the Baltic entrepreneurs or Baltic companies, there is enough resources to finance even locally. So for deal making, there should be no issues in current year and in coming years.
Yeah, I think for overall like venture capital, if you look at VC, I think we have several big funds just launched. Even in 2022, we already have a number of players coming in with completely kind of new funds with a lot of dry powder. And it's only natural, right? Because relative performance is that still kind of local investors are providing, you know, on aggregate, on total inbound investments, up to 5% of total capital, right? So meaning typically it's not a secret, right? It's like Captain Obvious explaining that we fund the most early stage and we don't have enough capital to ride the J curve when there's only a question of money and you need to deploy big and large tickets, large amounts. So I think following the success of early stage, we could expect some fund managers raising much larger funds to participate in A rounds. And we've seen, you know, with Kristjan's also participation, Nordic Ninja, their kind of Nordic Baltic positioning, precisely seeing this opportunity. And I do expect kind of this dry powder that is currently available is an outcome of overall ecosystem healthy situation of ecosystem, new pipeline, entrepreneurs being very kind of wanting to give back to the ecosystem, wanting to create here. We see more and more kind of holding companies staying in the Baltics rather than moving outside, right? So all of these trends kind of signals that this is kind of the beginning, and this dry powder coming in the next 5 years will facilitate more and more. So let's hope that we can kind of keep the wheel spinning and kind of creating asymmetric returns for the whole Baltic states. This is the place where I think we can be exceptional and excel at, is this asymmetric kind of entrepreneurial spirit of Baltics, right? Having not large enough internal demand to sell here.
Yeah, and with regards to deployment, I think just have to be maybe even more ambitious. You know, as the outbound deals are growing, have to understand that this is a very normal practice to buy something small, maybe in the Baltics, and then buy something much bigger in Scandinavia or Poland. Finally make our mark there as well.
Very good point. So I'm always a fan of outbound investments, as you know. So I think we can use the liquidity also to expand outside, and therefore we are monitoring our outbound efforts as well.
And you're right, and as you see in the numbers, you saw in the numbers, I mean, the outbound investment was very high in 2021 in terms of value of investments, 53 million, and achieved new records of a number of investments in terms of deals. It's 50 deals there. So overall, you know, during the period 10 to 21, 142 investments have been done outside the Baltics from the Baltic funds. Majority in Nordics, in UK, in Poland, you know. So what I hear from you guys, then you feel like this is just the beginning of this growth and there should be more. Am I right?
Yes, absolutely.
Yeah.
Okay, so growth of 30-50% for the next couple of years is what we're expecting, and then we'll solve the dry powder thing also. Okay, but I mean, maybe some comments on, you know, I know that Livonia has done some outbound deals. I mean, maybe some comments, you know, what are the key challenges there, and how do you approach the markets that is something that is not your home markets there, and need to find opportunities. I mean, maybe some comments from that perspective.
Yeah. By the way, just finishing the last point, I think there's now a clear competition among funds to be the first one to raise €1 billion fund. So that's the next milestone.
Okay.
But for that, we for sure need to be very ambitious about outbound investments. I think for now, most of the outbound investments, at least in the buyout stage happening, still have some connection to the Baltics. So the outbound investment that Livonia did in Norway, you know, we basically worked out this deal because the Norwegian company had a smaller manufacturing plant in Lithuania. So we just learned about what they're doing there and how this Lithuanian subsidiary is working with the Norwegian parent company. And it was an asset that was clearly too small for the local Norwegian or Scandinavian funds, because you know, in Scandinavia there's so much private wealth that these funds tend to grow very quickly. They tend to grow into $1+ billion size very fast. So in some ways, this small mid-cap market is maybe a bit underserved. I mean, there is some activity, but I think in terms of financial investor competition, it's fairly limited. And that is maybe one of the advantages that we have, that we are able to look at these smaller deals, and we're ready to work in and to grow them into bigger ones, so that they become a target then for this Scandinavian funds after 5 years.
Yes.
Yeah, sorry. In terms of challenges, you know, of course, it's a little bit challenging with people from, you know, speaking different languages, having even different currency in Norway. But I think there wasn't anything that seemed very complicated for us. I think the Baltics by now have become a very professional environment. The deals happening here already are, you know, typically professionally brokered. There's competition, and you know, I don't think anybody saw us from the Baltics as barbarians at the gate trying to enter Norway. I think we left a professional impression as well.
Yes, and maybe I can add here. So it's cool that Nes mentioned that somebody should raise a €1 billion fund. I mean, I just recall a few years ago we had a goal in Estonian Venture Capital Association that the total assets under the management is 1 billion. I mean, it was a big goal, and finally it was reached. And now we are already talking about maybe one fund should be at 1 billion. And okay, maybe inflation helps us as well. Maybe it's not as big funds as we think after a few years. But yeah, of course, the goal is there. From the BaltCap side, we have now offices in Helsinki and Warsaw already for a few years. And I think this is one way to go, is actually to be local on these markets where we expand and have local presence.
And I could add, you know, early stage specific is that outbound could be classified in two kind of big groups, right? One is domestic outbound, due to the fact that Baltics have a large diaspora that is kind of, you know, UK, US, Nordics that are part of it are professionals or even entrepreneurs, right? It's natural kind of to do outbound deals in Baltic diaspora, domesticated kind of in UK or US. And this is kind of, we call it like, domestic outbound. And then there is this true outbound deals that are happening in non-Baltic related entrepreneurs. And I would say, domestic outbound deals are more natural. They are still, you have a lot of social nodes, common culture, very typical approach. You find the easy to kind of work on board on the board level and so on. However, on the true outbound deals, Baltic VCs or let's say investors are still, except probably for big successful tech entrepreneurs that can invest wherever they want. It's truly global, like ex-Sky founders or Wise guys, right? Wise means TransferWise. We do have a cultural bridge, I would say. That's what at least we notice investing now, 3 deals in Finland and one in Sweden. There's different culture. There's different approach how you do, different pace. Even on the board level, there's very different communication. So I would say on early stage, there's a lot of opportunities, but we are really, how to say, not nobodies, but close to nobodies. Investing have to prove it. And early stage is based around proximity fees. You have to be a proximity. So if you come to Norway or Finland and you are not like close, you're not in proximity, so it means you have to have a certain specialization or certain angles how you can get into the deal. And I think we will see this trend among Baltic fund managers that in early stage there should be a specialization. Like Karma has deep tech angle, right? We are on the company building side and so on. So everyone will find this angle where they will be good or better in top quartile in our region, and then we will see more and more outbound deals kind of coming due to our expertise. But I think a lot of these domestic outbound deals are classified as outbound, and this is only natural. And this is our very, very big strength of very large diaspora, very sophisticated professional diaspora around.
Maybe actually I want to add here, because it's an interesting point. Indeed, it used to be that most of the deals came from this the Baltic network. In Estonia, there is this Estonian mafia that all these startups and the founders are connected, and it's becoming the Baltic mafia. So we have a huge connection network. But what I see through maybe latest developments, say Nordic Ninja, is also that now seems that the Baltic brand also works. That you do not necessarily have the Baltic network, but we are also relying in our brand that we actually can do the startups and we can successfully bring them global and work with this brand rather than just direct network.
Yeah, and I think very good point, Kristjan. And I think even if you can come back to the situation with Ukraine war, I think Baltic states showing clear moral compass and clear leadership, right, also adds to this this kind of overall impression that we're from Baltics. We see things how they are. We are pretty straightforward, and I think we are very, very outbound driven. So very much kind of not afraid to go to lengths and not afraid to show the leadership.
All right, thank you very much, gentlemen, for the outbound discussion. We kind of jumped over investments and divestments part, but I think it kind of made sense there. But let's come back to inbound investments there, and also we can see one of the highest, if not the highest year, basically, over the period since we have the data. With 138 million worth of investments and 270 deals in 2021 there. So tell us your experience and thoughts and comments on the last year's inbound investment market.
We shall go first.
Yeah, okay, I can start. And I would take we can take a venture side, and what we clearly see is if there is a startup from the Baltics, it has to be competitive, because we can do outbound as well more and more easier. So it means that even to get a local leading venture capital, you have to be globally competitive. It is not an age that you are actually based in in the Baltics. But fortunately, there are pretty good entrepreneurs coming up with I would say globally competitive ideas. So I mean, we see that naturally we are also investing into the Baltic startups, but they have to understand that this is global competition. There is no points gained from just the fact that you are in the Baltics.
Yeah, so true, you know, and BaltCap also is investor in Lithuanian unicorn, North Security. So who would have thought that BaltCap again would continue doing kind of VC investments? So it tells a lot about our startup ecosystem, having such an established player, you know, participating in this. And I think 2021 was exceptional year because now all 3 Baltic states have unicorns, right? So we had a unicorn in Latvia kind of, and finally 3 sister countries or brotherly countries are at least have another thing in common, right? So that was, I think, very interesting. And yes, we had a record year in terms of our ecosystem, in terms of VC ecosystem kind of investing in as a fund managers, but also measuring system within a system, right? It's not very fair. So if we take overall like inbound investments in the Baltics, what happened is we see 1.6 or 1.7 billion euro attracted by Baltic entrepreneurs or startups attributable to Baltics, meaning has an office here, has a headquarters here, or is originally from here. So this is a record number, but in 2022 already we have a higher number. So it's kind of on a vast acceleration path, and I think kind of Baltic funds contribute less than 5% to this number. And if we take away the unicorn rounds, right, we are left 2021 with 600 million euro attracted. So it's 15%. So we are still as a local ecosystem have a long way to go. Meaning, even if we take out all of these big funds and we focus on pre-seed, seed, kind of Series A, right? And we also, this number, like 15% includes angels, all right, which is not accounted in our report, right? So we see that we have a lot of room to grow. So I think we have a record year from the VC kind of association numbers. We have a record year on ecosystem as a whole, and we do have a lot of room to grow. And dry powder available and dry powder incoming, I think is gonna develop. We need still to develop our ecosystem in terms of venture capital, private equity further. There is a lot of room to accumulate more dry powder, in our opinion, especially in early stage.
Yeah, I think if there will be an index through which I can just invest money, so this is distributed across all VC funds in the Baltics, we'll definitely do it. I mean, of course, by now that Sequoia, Andres, and Axel, Tiger have invested in the Baltics, it's becoming very competitive. Yes. But still, in all of these companies and also in these deals, local funds manage to play some part, either because just friendly relationships, or because of backing these people earlier. Yeah, let's see if the foreign funds will keep being as active in the coming year, given the relative slowdown in maybe VC abroad. Definitely bullish.
Okay. We kind of focused more on the VC part of it from the investments perspective rather than the buyouts or growth. But one of the questions we had from Aram is that it was noticed previously that through the past years that Baltic private equity firms were significantly focused on real estate. In such turbulent times when prices of commodities are unclear and construction halt, is there a possibility that the focus will shift somewhere else? Any comments, Kristjan?
Well, I didn't kind of catch it. So real estate.
So the question is that from Aram that he thinks that previously the focus was really from the private equity firms to focus on the real estate investments. And maybe that's not really the case. I don't think. I mean, there was definitely some real estate investments. I think the BaltCap even had a fund focused on that.
So BaltCap doesn't have an, I think Livonia and Valdas are largest players. We do not have real estate funds, but of course we have EFTEN as a member. That is the largest real estate investor, and real estate is one of the asset classes. And well, EFTEN has been doing really well in this particular asset class. Maybe so that would be then not correct to say that we are investing into real estate. But maybe what I can say here is what I am also quite satisfied with is that now we have so diverse fund strategies, so that if we sell our region outside, this is not just venture capital in all its stages and buyout, but we have also secondary funds, infrastructure fund. We have various, we have, of course, real estate funds. So there are many strategies to choose from actually in the Baltics.
Okay. Still talking about investments. I mean, any thoughts on what do you think has been the most notable investment deals in 2021 in Baltics?
I can start with VC and then give probably room to colleagues. Again, 2021, right? Balt, Veriff, and Glia, kind of in Estonia, the biggest deals. Overall from inbound, in terms of kind of where the funds participated is of course Veriff, where I think a lot of local funds put quite substantial amounts of money. Then we had in Latvia, I think Printful, Printify, Localize, Whimsical, which is also kind of substantial amounts raised, and I think we'll see another unicorn next year in Latvia, kind of coming from this batch. And of course, I think the largest deal where local funds participated, as indicated by Linas, was Printify with Change Ventures, right? And in Lithuania, of course, it was Vinted, TransferGo, Interactive, and PV Case. Also kind of these deals were exceptionally important for the ecosystem. However, if you look at where the Baltic funds put the most money was CG Trader, which was I think number 5. So again, kind of ecosystem-wise. I would also add this remark that in Estonia, we clearly see this much more developed ecosystem, but also we don't see so much of, let's say, VCs participating with large tickets. So I think if we look at this in the ecosystem, there's a lot of angel and early stage activity, like angels and angel funds. They are very actively participating, and in terms of capital deployed. Due to the fact that most of the funds were raised in 2019, we will see this batch kind of local managers coming in later in 2022 and so on. And then, of course, in Latvia and Lithuania, we see this kind of mega deals trend just picking up and coming up. And there's a lot kind of to catch to Estonia, but this gap, I think, will be hopefully kind of narrowing a bit.
Maybe I can add that indeed we can do in buyout whatever we want. I mean, many times money back, but the image is created by the unicorns. So that is what helps us to sell the region, and people immediately say, you are from the land of unicorns. I mean, that is what creates our image. So, and it helps in buyout as well, I would say.
Yeah, in terms of specific buyout deals, unfortunately, Latvia wasn't the place to look for them last year, but hopefully this year there will be more buyout deals happening in Latvia.
No, you're right. I mean, we can see that from the number around 60 million in Lithuania and 60 in Estonia and only 17 in Latvia. Yeah, so it has been lagging behind. Okay, we have one more question that I haven't read from Thomas on the comparison Baltic market compared to other Western markets, Europe or US. Maybe you have an insights on the key things that you think is different currently, which might kind of give us some trends where we're heading.
Yeah, I could probably start here saying that in terms of per capita, if we measure per capita kind of inbound investments or unicorns per capita, Baltic states are outstanding. Of course, Estonia is contributing a lot to this, but overall we are ranking like 4 times, I think, higher than European average. Of course, it's a big sample, and we have to understand that probably. It depends, right? It would be, but still, like on average, EU 27 average, we are very like 3 times higher in the Baltics in funding per capita. Unicorn per capita, we are also in the top 5 globally after such countries as Israel and US. But also, kind of ease of doing business, attractiveness of employee stock option programs. Just removing a lot of friction. More and more unicorns means more and more talent pool available, knowledge spillover, so on. So I think we even looking at this single point where we're already above the average, but looking at network effects are still to kick in Latvia and Lithuania following what's happening in Estonia, I see a very bright future. And I think that's why we see, Tiger, we see Axel, Sequoia Index, everyone scouting for pipeline here and looking what is happening. And I think we have a bright future ahead. And reiterating myself, this is the export of Baltic countries, is entrepreneurship, in my opinion. Not to say that buyout doesn't, or mezzanine or real estate doesn't provide any opportunities, but I think kind of this is very, very, very asymmetric play in terms of entrepreneurship. And let's not forget, all of these billions have people behind them, right? So all of billions raised, all these valuations, they have people that are earning from ESOP. We have first time in Lithuania, I think we have like 20 or 30 millionaires, employees, millionaires, which probably is impossible to do in a corporate company, right? And all of them will be putting money back into the ecosystem. So that's why I think it will kind of synergetic effect, venture capital, buyout, mezzanine, everything will kind of keep the ball rolling going forward.
Yeah, I would say that if we look outside from our community, the liquidity in general in the Baltics is very, very high. So there are high net worth individuals now have made major exits from the same unicorns and from venture, but also from traditional industries. I mean, I wouldn't be worried if somebody from outside invests or doesn't invest into the Baltics. I mean, foreign investors give a certain stamp of approval, and that is still important, but not in the sense that we need some cash here. Liquidity on the market is very high. Then about what is happening in the States and Europe, I just came back from London 2 weeks ago and spoke with my colleagues. And what they said, and I think this is something we see in the Baltic market now as well. If we look at the A-class deals, they are still very expensive. There is a lot of competition. B-class, it gets less competitive. And if you have a weakest deals, the C-class deals, you have a trouble financing them. So maybe what is happening currently is that if you have weaker deals, they do not get financed so easily anymore. But then again, should we finance weak deals? I mean, we shouldn't, most probably.
Yeah, the only thing to add, maybe comparing private equity scene in the Baltics to the West, probably still valuations are lower. The average European EV/EBITDA multiple last year was 12 times EBITDA. There are deals happening at these multiples in the Baltics as well, but this is for very good assets. I would think that and part of the low reason for lower valuations is also the available debt financing, which the banks here still are not as aggressive as they might be in the West, and then that influences the multiples, I think.
All right, and the last topic we have for today is really about the divestment part. And as you saw from the data, there's been quite a few of those, of 57 exits during 2021. Well, as you know, we are measuring the exit as divestments at the cost, but probably it more shows a trend rather rather than anything else. Nevertheless, so what's your take on the divestment for the last year? How challenging it has been for your funds, and any other thoughts on that topic?
I think last year was the best time to exit. Let's see if this continues, because I think the corporate financial performance was very good for most companies last year. I know manufacturing companies grew simply by inflation. All technology companies performed well. I think, and at the same time, the valuations in the Baltics were also seemingly catching up already with the West. And let's see how the sentiment changes. I think also Livoni and BaltCap managed to do some good exits last year. So overall, in that sense, even in Latvia, it was an active year.
Yeah, I agree that 2020, 2021 were both very good years for exits. 2022 we will see, but maybe that will somehow connect to my previous comment that if you have a really good asset, if you have like a platform investment with recurring revenues, most probably you still get the top dollar for that, because there is a huge liquidity and the market is searching for good safe assets. If you have a weak asset, I mean, it becomes more difficult most probably to exit.
Yeah, I agree that, you know, looking at the multiples, record high multiples over the past 2 years, it was getting very out of hand. Right now we have probably a very big correction, and a lot of IPOs also from the, let's say, Baltic companies, or where Baltic funds are invested, or at least took part, or the founders are from the Baltics, were postponed. So this would be the ideal case, exit from an IPO. The problem with VC is that we cannot make a kind of big press release. No, we can probably put on social media we exited, but it's not going to be like selling the company and then a big kind of press release. It's typical exit path for VCs are trade sales. Let's say trade sale, meaning like there's next financing round and then new investors buy a part of you, and it's kind of gradual phase out. Ideally, we would be happy to exit through IPOs. You know, that would be a story, but that's a dream come true for any type of VC investor too. And since we invest super early stage, getting company into IPO from Baltics, it takes like 7, 8 to 10 years. So you probably even can't wait, given your funds time horizon. So I would say from the divestment side, it's still young ecosystem, but we'll see much more of them happening naturally, just by definition that some funds have to close and liquidate. And looking at the current batch where the funds are invested, we will see some really good and nice returns and really good stories. Hopefully, we can sometimes share the real multiples, real returns, and not only reflected in the statistics, but also kind of case studies.
Okay. And Kitty is asking, to our minds, what factors have driven exit climate, positive exit climate? Well, I think, as previously mentioned, the macroeconomic situation and the positive performance of the corporate buyers, probably one of the top of our minds. Anything else, gentlemen?
Yes, of course, the quality of assets, especially if we look at the startups, you would not get this type of exits or IPOs like if you have a weak asset. I mean, of course, the quality has been good, and then you will have a good exit as well. And I just wanted to comment on the IPOs as well. I think we are still waiting for an IPO in buyout, because we are mostly doing strategic sales now. So we're just in BaltCap's history, we once IPO'd Saftechnica, but it's already getting shameful to mention it. It was so long time ago, like 20 years. So I mean, in buyout, we are still waiting for IPOs, I suppose, because, for example, take Finland, it is one of the main exit routes to IPO, also not just in venture, but also in buyout.
Yeah, I agree. No, like looking at the negative interest rates and kind of just keeping cash at bank costs you money. So for corporate, with record high of cash kind of on the balance sheets, it's just a pure loss. You know, even our companies or any companies from the Baltics, they raise like 100 mil and they pay quite substantial amounts per month to keep them in the bank, right? To keep them employed. So I think this pressure also was a big kind of big drive or kind of reason why to look around, to shop around. Increasing multiples also was kind of you are being valued as a company somehow. You're increasing your valuation. There's more room to kind of get borrowing, get kind of financing, and there's just a lot of this economic activity that was driven. Right now, we'll see with interest hikes and the price to pay that kind of comes after some time for whatever you did. Yeah, that's why, you know, there's this gloomy picture towards the end of this year and the next year in terms of that there will be some say there'll be a recession. We'll see how it goes, but let's hope this positive trend will continue. Entrepreneurship and great companies will get funded, great businesses will be built. Nothing changes fundamentally, just removing a bit of a speculation side. So maybe, you know, like NFT projects or so on, like which received a lot of boom. I don't know. Maybe this is not the projects that would get a lot of attention this year.
Okay. We have one more question from Zinters. How do you see the attractiveness of Baltic employees? How do you see the attractiveness of Baltics for employees in terms of taxes? You know, currently it seems that Estonia is a front runner there. I mean, do you see this as an important factor when Baltics started to compete for talent?
Well, the taxes are quite high actually in the Baltics, including Estonia, and if we add huge pressure on workforce, because there are so many startups, so many funds raised, and not only our local ones, but also foreign companies want to establish their development centers in the Baltics. So I mean, that is actually hindering, I think, development currently. It's like you have two short sheets, and then everybody are trying to get them on themselves. So I mean, it's more like an issue actually currently, and I think the companies are now looking outside to create the development centers because simply the lack of workforce.
You know, I kind of agree, and probably the big distinction to make is Baltics is no longer cheap country. We are skilled and we are kind of specialists in many areas, right? And I think there is definitely a price to pay for this, but compared to Silicon Valley, we are so much cheaper, right? So much cheaper that it sometimes, you know, it doesn't make a difference. Talking about early stage, but looking at, let's say, investments as percent of GDP coming to the entrepreneurship sector, this sector paying, like in Lithuania statistics, we pay nearly average salary in tech sector is 2 times the average salary of Lithuania, right? And it's increasing. So this sector kind of sucking in a lot of talent pool and you know, kind of paying premium as long as you create incremental value. So I would say this is kind of being cheap or not is very relative. If you look at the big picture, the tax system is still, I would say, efficient from our point of view. The question is what the governments are doing with all this kind of taxes collected, and how we are reinvesting, and how we're making this, let's say, our country is a better place. Because one example is that we see right now Belarusian, Ukrainian kind of founders, or let's say not only refugees, but let's say talented tech people coming in, and they are surprised that we have to pay taxes. They're surprised. And I'm like, yes, but this is how we live, that because of we pay the taxes, right? So I would say, even though it's pretty high, we have a much more flexibility in terms of hiring. ESOP stock options and so on, and there's a lot of levers you could kind of negotiate. But I agree, in certain kind of sectors, there is this gap of or let's say the taxes paid for the lower part of the economy, right? For routine works. This is a problem. This is a problem, and there we probably will be facing a situation where no one wants to do these jobs if we don't change this in our ecosystem.
Okay. Well, to be honest, I mean, those were the main points that I was hoping to discuss, and I think we've succeeded in that. If there are any other comments from you or from any of the listeners or any question, we have three more minutes here. If not, then you know, thank you very much, gentlemen, for your thoughts, and thank you very much for sharing those. I think it was interesting discussion. Anita, do we have any question that I've missed maybe?
No, just a big thank you to everyone who joined today and listened, our panelists, and also the presentation. We are very proud that so many are interested in our region. And of course, I know that there will be a lot of those who will listen just the recording, which will be published on all our VCA's websites and also social sites. So for those also, we are greeting them and hope that they will get a lot of ideas and also good insights from what we had today. And thank you also to panelists, and Jānis, to you for your moderating. Thank you.
Thank you very much.
Thank you.
No worries. Thank you very much, and speak to you soon.
Thank you. Bye.
Bye.
Thank you. Goodbye.